Welcome to a special edition of our Space Defense Update because SpaceX is about to go public in a few days, right, Jack?
IPOing on Friday. Long time coming with this business, so we're going to have a very exciting 90 minutes of chatting about SpaceX.
Yes, this is the biggest, arguably the biggest single moment that the space industry has seen in a very, very long time.
Yeah. And we have a great cast today, some great guests that are going to come on to chat about it. I think first, let's set the stage, talk about what the terms are. This is coming up in 2 days.
Yep.
I can run through some of the headlines that have come about in the last couple days, couple weeks that have really changed the story with the IPO. So let's do that before we bring on the guests. But 90 minutes of SpaceX, let's go.
Yeah, let's do it. Okay, so for anyone just tuning in or waking up under a rock, so SpaceX is going public on Friday. At least that's a target. That's what we all expect. They're raising $75 billion. They're offering about 500 million shares, 555.6 million shares at a current price of $135. Books are closing Wednesday night, so orders are coming in between now and Wednesday night effectively. Currently, it's running oversubscribed. The rumor I've heard so far is that it's about 2 times oversubscribed, which, we'll talk about what that means later in the show, whether that's good or bad. And then importantly, retail is getting a 30% allocation. And now typically in these types of, typically in IPOs, you have like a 5 to 10% retail allocation. So this is a substantially higher allocation that retail is getting, and for a whole host of reasons we'll talk about. But since the S1 came out, there's been a flurry of news, which we should talk about before we start.
Yeah, let's cover that, and then we can bring our guests on. But to set the stage, as you've done with the financials that we saw in the S1. Last year, SpaceX generated $18.7 billion of revenue on heavy cash burn. In the last month, I'm going to read this off right now. We did a show, touched on some of the SpaceX story a couple weeks ago, but a lot has changed since. So just last week, SpaceX announced a deal with Google, where Google is going to pay $11 billion per year for data center rental. It looks very similar to the Anthropic deal that was announced. At least the terms are announced in the S1. So if you combine the 15 billion of essentially ARR that's coming in from Anthropic, plus the 11 billion from Google, that brings additional 26 billion of ARR into the business, which more than doubles the current business. So when we talk about revenue multiples,
Yep.
We could talk about it in terms of that 19 billion from last year, but I think it's more appropriate to look at it, and the valuation looks a lot more reasonable when we look at it from an annualized basis by the end of the year.
Yeah, I think, look, what was it last year? 18 billion?
19 billion.
Yeah, 18.7 billion to be exact. So it's 33% year-over-year growth. You already have about 25, 26 billion from the compute deals. Let's just assume a 40% growth on the business X AI, meaning X AI. Yeah. So that puts the launch on Starlink around 21 billion. So really, you can say that 26 is looking like it's coming around 50 to 60 billion. I added some buffer in there in case, I don't know, they announce a compute deal with a Facebook or something,
yeah.
Which at this point, I have to imagine there's going to be at least 1 or 2 more compute deals.
Potentially. But another piece of headline that dovetails into this is Cursor. So they have the option to buy Cursor.
Yep.
Cursor just hit $4 billion of ARR last week. That is an additional $1 billion from a month ago. So their revenue run rate is growing similar to what we saw. I'm not saying the magnitudes are very different, but similar to what we saw with Anthropic and OpenAI at the beginning or a few years ago. So that deal, SpaceX has an option to buy Cursor. That deal should close shortly after IPO,
Yep.
and that could add another $10 billion of ARR, annualized revenue, to the SpaceX story by the end of the year. And that, I think once you look at probably north of 60 billion of annualized revenue, the multiple then looks to be around 30 times revenue, which Tesla's trading at 50, and has for a long time, is traded at 15 times revenue. And I would argue that SpaceX is a better business and has a better growth story than Tesla. So that's, I think, what a lot of folks are looking at.
Yeah, and I think maybe before we bring in our first guest, there's been a wide range of projections and predictions around the stock, around the valuation, around the revenue, and I just want to set the stage on how wide-ranging these are. So one of our favorite people, Scott Galloway, NYU professor, media mogul.
I think it's the second time we brought his name up in the show, so he's getting a lot of play right now.
So I will say, so he put out a note, and I'll kind of summarize, but he basically thinks that the fair value of SpaceX is $600 billion, substantially off from the 1.7 trillion, and there's some funny tidbits in there, but one of the funnier ones is that if you look at the SpaceX S1, AI shows up 1,000, the word AI shows up 1,251 times. Okay, that's a lot. And then he wrote, well, in the Bible, Jesus shows up, like the word Jesus shows up 983 times. So look,
so that means SpaceX should be only valued at 500. That's how it works.
Look, now he quoted 94 times sales on the business, which is obviously not what it's more. It's much lower now given the recent announcements. But he also wrote, look, when Meta went public, it was growing 88% and traded at 28 times trailing revenue. Google was growing 240% and traded at 10 times. Saudi Aramco, now not a growth story, of course, traded at 5 times trailing revenue and was actually growing faster than SpaceX is today. So Scott Galloway, 600 billion. Morningstar came out at 780 billion. An interesting number that I thought was Aswath Damodaran, who's the NYU professor, who's really kind of sort of the godfather of the DCF. He came out and he put out a valuation of SpaceX that was $1.22 trillion. And he basically projected revenue growth from the 16 billion base is what he has it at, up to a $333 billion number by year 10, with operating margins expanding to 48%. So, Aswath, for the most part, has been a pretty conservative valuation guy. So I think that's just a kind of an interesting data point. And then, of course, Ron Barron of Barron Capital, $10 trillion to $30 trillion in value over the next 10 to 15 years. By the way, just to put that into perspective, at 30 trillion, that would be a little less than half of the S&P 500 today, right? So a pretty substantial increase. And by the way, just, Ron does, SpaceX is his biggest position. It's 15 billion out of his 50 or 60
that's an important point.
Under management. And then on some of the revenue numbers, Goldman, again, book runner, SpaceX's AI unit revenue, they think, will surge from 100 times from 3.2 billion to 322 billion by 2030. And of course, Morgan Stanley thinks overall revenue could reach 3.4 trillion by 2040. But of course, they're not incentivized by any reason to stop for the stock.
No, definitely not.
Okay, with that, enough about us. I'd love to bring in our first guest, who is a legendary investor. So, Mr. Howard Morgan, current chair of B Capital.
Welcome.
Thanks for joining us.
Welcome.
Look at that, you slid right in.
We're all comfy here?
Yep.
Howard, thanks so much for being with us.
Sure.
So before we get into all of this, I have a funny story for you.
Okay.
So I don't know if you remember, but the very first time you and I met was a Zoom call. It was a couple years ago. And the Zoom call starts, and all of a sudden I see your face, and you're on a bus. And I'm like, Howard, where are you? And you're like, I'm on the bus, a New York City bus. And I'm like, yeah, well, hey, look, you've been a pretty successful guy. I think your modes of transportation are not very limited. So I asked, are you? It sounds like you're a big New York City bus guy. Now you're an OG New Yorker, but
OG New Yorker.
Tell me about how. Are you still taking a bus up here today?
I took the subway. I've been riding the subway since I was 8 years old.
Okay.
And given that I'm a senior citizen, it's $1.50 for me, half price. Okay. And I just tap my watch and I'm on the subway. And if I want to get from my apartment in the Upper East Side down here, if I get in an Uber or if I get in a car and so on, it's probably an hour.
Okay.
And in the subway, it was 18 minutes.
Well, it's honestly one of my favorite stories because I'm a big MTA public transport guy. I grew up here in the city, and I've always been. People always don't like taking the bus, but I appreciate that you are supporting our fine public transportation. Now, look, you've had an amazing career. You've spent a lot of your career finding non-obvious signals. You were a co-founder at Renaissance Technologies with Jim Simons. You founded First Round. You're part of B Capital. So you've done everything from quant trading to venture. Where are you spending your time these days? How are you spending your time? I know we're gonna talk about SpaceX, but how are you spending your time?
At B Capital, I spend part of my time at B Capital as strategy for the whole firm, but I spend about half of it running our Ascent Fund, our early stage fund, which does a lot of deep tech investing, including space technology and defense technology and various interesting, what we would consider interesting things for the future. And quantum computing, unmanned surface vehicles, we've got a lot of interesting stuff going on. And that's what excites me is staying ahead of the world, not aging.
No, exactly, and you've done a good job at that so far. So when you look at SpaceX right now, about to be a public company, like what does that say to you about the broader market today? That we have this massive IPO that is it's unprecedented in all metrics.
It's unprecedented. I think the fact is that people realize that space and space technology is a huge part of our future, and I have to credit Elon for doing that in two modes. First of all, obviously, in creating launch vehicles that were cheap enough so that you could reusable vehicles, which was the only way to do it, and he was the first one to make that happen. And that allowed us to put stuff in space much cheaper. We at first round invested in Planet Labs when it started, and it was much more expensive in those days. Now they put up their satellites with SpaceX launching. The other thing was Starlink, and Starlink sort of changed the world for if you're in the third world, if you're in the deserts, or if you have an airplane. I guess they just signed a deal with one of the big airlines, forget American or United, to put Starlink on. And I will tell you that we were on a plane a few years ago that had the old-fashioned Wi-Fi, and then a year later they put Starlink on. Unbelievable. All my grandkids could now do their streaming, game playing, everything. So he's really done some amazing things with space and in space. Yeah. And that's going to continue, and I think the public wants a piece of that.
Well, I'll ask one more question. I'll turn over to Jack here. But so Renaissance was built on the premise that markets misprice things systematically. Do you think that the $1.75 trillion number is an efficient price?
Well, first of all, normally in an IPO, there's a testing of prices and there's a back and forth between the underwriters and the big buyers. That didn't happen here. They set a price. Yep. So no, the market did not set an efficient price. So I think that's pretty clear. What the efficient price would be, I don't know. I expect it would be a little lower because 2x demand is not what you want in an IPO. You used to want 5x demand, and then you'd have the back and forth, and you'd pick a price and you go out a little above that price. We recently took Fervo public at B Capital. It had a nice pop first day and has remained above the IPO price. I don't know if that'll happen with SpaceX because it's, if anything, fully priced or, in my opinion, a little overpriced for where it is today. The question in any investment, and we used to say this at Renaissance too, is what's your time horizon? Right. Right? I mean, if Renaissance sold a share of stock to Warren Buffett, if it went down in 20 microseconds, Renaissance made money. If it went up in 20 years, Warren Buffett made money. Sure. So the time horizons matter. And if your time horizon for SpaceX is 10 years, I think you'll do fine. Yep. If your time horizon for SpaceX is 2 months, I'd be a little worried. Yep.
Yeah, so that gets into the addressable markets that they're going after. They're going after space, dominant in space. They're going after connectivity, one of the largest markets in the world. And then AI, which we are seeing basically take over and taking a strong chunk of GDP. So if you look at the S1, and you were a professor before at Wharton, if you look at the S1, and I'm sure you saw the $28 trillion TAM, maybe what does your academic training tell you about how to evaluate a number like that, and what is your sense on
Well, it's not 28 trillion this year, so, and I think Warren Buffett said, that it is a giant TAM, there's no question about that. I don't believe it, but on the other hand, they don't need to achieve much of that TAM to be worth a lot of money. If they got 5% of that TAM, right, then they'll do pretty well, right? And so, I think in the long term, it'll be okay because there's no obvious competitors on the launch business except for Blue Origin, and they haven't quite gotten it together the same as SpaceX has. There's no obvious competitor yet for Starlink, but Amazon's putting up LEO. It's going to be, 25,000 and then maybe 100,000 satellites. That'll be a serious competitor. It may take a couple of years, but I don't think they'll keep the market share in space communications that they currently have. So they won't dominate as much, and there'll probably be a price war, which will hurt margins. So that piece of the business I'm a little less sanguine about. in terms of how giant it stays. As far as AI, X.AI and Grok is supposed to be great AI, but what they're making their money on is selling their Colossus and the fact that they bought lots of chips early to Anthropic and now to Google. That's not them winning in AI.
Yeah.
That's them winning in the data center business.
Yep. Well, so it's to that point. You were part of the ARPANET transition in Philadelphia, 1974, I want to say.
73,
we're,
but yeah.
We're talking about a major shift in infrastructure, like in transition in infrastructure. Do you see space-based AI compute as meaningful as what you saw back in the 70s?
I do. I think the fact is that power needs on Earth are not sufficient to meet what we need to do. I think cooling, which is a major piece of what you have to do on Earth, is a bit easier in space. It's not trivial, by the way, because you don't have radiant, you don't have convection cooling, rather. You have radiant cooling. So you have to get big radiators to get the heat out into the cold of space. It's not so simple to say the chips in ice cold space. That doesn't work because the chips still generate a lot of heat that you have to get away. But I do think it makes the problem simpler. So I think space-based computing is an important area. It's going to be very important for the future. I think most of the computing that we do can be done up there, particularly when the space communications is good enough, which it finally is, to be able to get the data back and forth or the answers back and forth.
So I can tell that you're a student of history. I'm assuming you read a ton.
Yes.
How much do you read? I love asking this question.
I read 150 books a year.
Oh, wow.
Okay, that's a lot of books.
I read a lot.
That's a lot of
That's a
bus
lot.
rides.
Question. Are you one of those people that has to, when you start a book, you have to finish it?
Pretty much. I mean, I think I maybe abandon 2 or 3 books a year. I just kind of feel compelled.
So I asked that because one kind of unlock, and which I think some people are not happy when I say this, but I've come to this new realization that I don't need to finish a book. I can read, especially, I mean, a fiction book, you can't really do that. But a nonfiction book, you can like look at the table of contents. You can say, here's the things that I care to learn about, read it, and then move on. And I think people get sometimes stuck in I remember reading this book called, like, I don't know, The History of the Nuclear Bomb or something, and it's like 1,000 pages. And I ended up not.
I get it.
It's very dry. Anyway. Anyway. So, okay, so you're a student of history. Like, what does history tell us about, like, when infrastructure ambition moves far ahead from kind of initial demand?
Well, that's 2000, and you got we had fiber optics. People poured money into MCI Global and a whole bunch of other companies at that point, and they all crashed. And 10 years later, all that fiber got used, and it made for wonderful things. Same thing happened in the railroad industry. The railroads all went bankrupt in the beginning, but eventually the railway they had laid was useful. I think some of that is likely here. We're ahead of ourselves in some of this data center. Now, the difference today, of course, is we do have billions of users of the technology. When you see how quickly OpenAI got to 200 million users and Anthropic. So there is some real usage, but it's still way ahead of itself. And we're seeing that now in token costs going up and companies cutting people back and how much they can use. So I do think we'll see a big pullback, and that's what history says. And even with the Meta IPO, Meta came out at $38 a share and dropped to 19 or 18, right?
Yep.
And now eventually, now it's trading at 600 or whatever it is today. But it built to where it should be, and I think that's what's going to happen to SpaceX. It's going to drop at some point. There's very little. The only reason it won't is because it's a meme stock.
Yep.
The public loves it, and there's very little float. One of the things you didn't talk about is how small the float will actually be in the first few months. And it's got this funny lockup release that if the price keeps going up enough, then more stock becomes available. I think that there's some incentives for them to behave in ways that force that lockup release, which means they'll push the price up initially. But I would guess that we'll see SpaceX trading at $1 trillion or $1.2 trillion sometime over the next 9 months.
Yeah, story as old as time itself, at the top and then come down.
Yeah.
I like to think of it maybe less of a meme stock and more of a dream stock, where you are, just like quite a new term.
Did you plan that?
No, I didn't. I just thought about it right now, because my next question was, like, how, as an investor, do you do you invest in that future TAM or the dream of that future TAM? I think a lot of folks do that with Tesla as well, the dream or the future hope of Optimus robots and vehicles, and similar to this, you can see it. I mean, you can see a world in which AI is dominating our society, and you might need a lot more data centers than we do today. But maybe it's just kind of a bet on Elon because he's proved it before. But how do you? Is that an investable approach?
It's very hard. I mean, look at Tesla's stock history, right? He was worth more than all the other auto companies combined, and went way up. People who shorted it did not do well.
Yeah.
Unfortunately, one of my friends was one of the big shorts, and then eventually it did come back down to reality. And now you have BYD with more than half the market in electric vehicles, so he's betting on robotics, which I'm also betting on, actually with a company called Aptronic in Texas. But the Tesla bet today is not on electric cars; it's on Optimus robots, and that's a dream.
Yeah.
So, and I do think with space, there's a couple of dreams. And the question, of course, for many people is, will he try to fold Tesla in so he's only running one company?
Yeah. And do you think he will?
I think he'd like to. I'm not sure that regulators or others will let him do it.
Yeah.
But, because he's...
Or it might be a very unique regulatory environment where he has one shot to do it. And in a couple of years, it looks very different.
That's true. That's true.
Is there anything in the filing that you've seen so far, or a risk factor that you feel like people aren't taking seriously enough?
Well, I think that I think they're not taking the competitive competition coming into the space communications piece. If I mentioned Amazon, but there's some other players as well. The Europeans have some satellite constellations going up and so on. So I think people are ignoring that. They're assuming that Starlink will get everything. On the space piece, I think you've got 3 or 4 years before there's serious competition, but there will be. You've got Rocket Labs, you've got Blue Origin, and so you have competitors coming in there, and Blue Origin may well go public. Jeff's ready to take outside money now into that.
Yep.
So I think we'll see some more competition in each of their main business lines. Obviously, the space data center world, you've got some venture-backed companies in there, StarCloud, for example, who are going to put data centers up in space before they will. So we'll see.
What else beyond SpaceX excites you, maybe in the space world or in other kind of parts of the...
Well, I mean, there's so much more infrastructure to put up in space. We're investors along with Cerberus in Starcatcher, which puts power grid up in space to provide power to all those satellites that don't want to bring up heavy weights of batteries to store power.
Yeah.
So, we beam power onto their solar panels. Instead of just getting the one sun that's out there, we can beam 5 suns onto the panel, and now they have 5 times the power. I think we'll see other infrastructure for space-to-space communications. We're mostly seeing space-to-ground, but with the data centers, we'll need more space-to-space communications, and there are a couple of companies looking into doing that. And then, of course, there's the whole moon issue. Can we actually mine stuff on the moon? We know that helium-3 is available in the regolith. If you can mine that, it's $20,000 a gram, and you can get it back to Earth. You can make some real profits, and there's other asteroid mining and so on. So I think there's a lot more happening in space over the next decade.
Yeah.
Is space a big category for B Capital?
We keep looking. We've done a couple, but I'd like to do more. I
Yep.
do think space, it is. If I think where the internet was, you talked about, I was on the internet or the ARPANET back in '73, and the internet sort of came out in '93, and then the World Wide Web exploded. I think space is probably around 1985 or 90 in that way.
Wow,
so
interesting. So pretty early.
Still very early. Monster growth.
And it's interesting you mentioned investing in Starcatcher, which is in a market that SpaceX does not compete in. So how do you think about
Yes.
investing in space? And would you invest in a market or a sub-segment of the market that SpaceX is a dominant player?
And by the way, I would just chime in one quick thing on that. I mean, you've seen this time and time and again. You have some sort of monopolistic player, like a Google or a Facebook, and then everyone has the question, well, what if XYZ does this?
Yeah.
Like, how do you think about that in the context?
Well,
of
we do think about that as a risk factor, and it depends how established the monopoly is. Right now, SpaceX's launch monopoly is a real monopoly, pretty much. But little bits are being chipped away at the edge. And I think when Blue Origin gets it together, there'll be a big, because everybody wants to go elsewhere. It's different than Google search where you had real network effects. There aren't real network effects in launch, right? And so they don't get the benefit of that. Facebook got the benefit of network effects.
Sure.
Google got the benefit of network effects. SpaceX doesn't have the benefit of network effects. And even in the data center world, there's no real network effect benefit.
Yep.
So there is room for competition.
Will you be personally investing in SpaceX?
So I told my broker who called me, and I would put 100 shares in my account so that I can track it really well.
Okay.
And but in a serious way, not at this time. After the crash, maybe I will.
Okay. So I mean, no one has a crystal ball, but I guess it sounds like your expectation is for the near short term, we'll see an elevation in the stock price.
Yep.
Maybe it'll start to find its footing, but over time, I mean, it's just a lot of stock that's out there.
I think, the fact that Damodian, whatever his name is at NYU, who's a really conservative valuation guy, came up with 1.2 trillion, says to me, that's probably the right price.
Yeah.
And I don't think it has to go down to under $1 trillion, but I think that's more like the right price. And the fact that the price was not set by the market really bothers me.
Right.
Most IPOs, the price is set by the market.
Right. If it were set by the market, where do you think it would have landed?
I think it would have landed closer to the 1.2, 1.3.
Okay, interesting. Howard, thanks so much for being with us. This was a pleasure and an honor to have you.
Jack, Mo.
This is great.
Always great.
This is
Thank
great.
you.
Until next time.
Yep.
So, I have to say, 150 books is a lot of books.
I'm glad we had Howard on because we're going to have different ends of the bullish spectrum today. And I think that gives a nice kind of realistic view of it from someone who's been in this market for many, many years.
Yeah, I think Howard's a legend. And so, honestly, I'm just impressed with how much he's following along with the technology. Not that he shouldn't, but it's not easy to kind of understand sort of a lot of the nuances of what's going on. And I'd say most people don't.
Yeah.
For the most part.
Yeah.
Okay, so as we wait for our next guest, I did have so some interesting news came out over the last couple days. I think yesterday, actually, technically. So Elon came out with the architecture of the AI satellite, right? And I think it's called AI1. AI1, exactly.
Yeah.
Did you have? What was your kind of initial? The architecture looks really interesting. It's very much built for, to be able to upgrade it very easily, right?
Yeah.
And from everything that Elon has been saying, it's far simpler than the Starlink comm satellite, right? You
Yes.
don't have a two-way laser link. It's just, you're putting up compute and you're just ultimately beaming it back down to Earth. But did you have any thoughts on the architecture?
There was also a announcement earlier that they are going to allow NVIDIA GPUs and Google TPUs and other chips to be swapped on to the AI satellite. So this is kind of the first time that they're opening up the ecosystem a little bit in that in the satellite bus. But I think what was more interesting, what came out yesterday, was he thinks, and SpaceX is projecting, that operations at the AI satellite manufacturing facility will start at the end of next year. So that's very quick. They haven't even broke ground. They broke ground on the solar facility, but not the satellite production facility. And I think, supply chains just do take a while to come online. So I think that 2027 number is aggressive, or timeline is aggressive. I think getting AI satellites in orbit in a meaningful way by 2028 is probably aggressive. So to me, this looks like more of a 2029 timeline. But still, we're seeing what folks are willing to pay for compute. We saw that with Anthropic and Google, and I think that is a benefit to the orbital data center play.
So I did a little bit of orbital compute math, and I want you to check me on these. So what I was trying to figure out is, once we have the numbers out, how many satellites would SpaceX need to put up to match one of their centers here on Earth? So data centers, like Colossus. Basically, I looked at Colossus 1. So the Colossus 1 data, I did this morning, so If it's wrong, forgive me.
You can do this live, really?
I'm just going to do this live. Okay, so SpaceX Class 1 data center has about 300 megawatts of compute capacity. Okay, the average payload capacity of the AI satellite, AI-1, is 120 kilowatts average. So 300 megawatts, 120 kilowatt satellite, that's 2,500 satellites. Okay, so and the mass per satellite they have at 70 kilowatt per ton. So each satellite is about 1.7 metric tons. So the number of satellites, assuming a 100-ton Starship, and I know it could be 100, it could be 200. I mean, this is a wide range, but assuming a 100-ton Starship, that's 58 satellites. Not taking into account packaging efficiency, right? Obviously, just because the mass is there doesn't mean you're going to fit it all. In the payload fairing. So I don't know. At 50 let's just say it's 50 satellites, but like effectively that's 50 Starship launches, maybe kind of 80 to 100, which feels pretty reasonable to put up a Colossus 1 in.
That is what's exciting, and I think this. I agree with those numbers, and I actually think. I mean, we just mentioned how this is likely more of a 2029 event, and I think 2029 you're going to be looking at Starship V4, which instead of 100 tons to orbit, that's 200 tons to orbit. So the math gets even better. But I think it's fair to say we don't know the exact how many we'll be able to fit in, but I think under 100 satellites per. I guess per Starship, and maybe 100 Starship launches, I think is fair. But at what they are projecting to do, the cost to launch a gigawatt data center is not that expensive. It's less than, probably ends up being less than $2 billion in total. So, people say, oh, it's really expensive to move things into space, but an AI data center on Earth, a gigawatt AI data center on Earth, cost $50 billion, $60 billion. So, a $2 billion launch cost is not, it almost becomes negligible to the total cost. And it's really, again, we talked about this a million times, but it is speed to scale. And I think this is going to be AI is going to be the defining political issue of our generation. NIMBYism is acute now, but it's going to be extreme in 5, 6, 7 years. And folks might not think that. If you don't think that, if you think the terrestrial bottleneck will ease, then orbital data centers, I think economically they probably are break even, but they don't make as much sense. If you do believe it's going to take 10 years to put up a data center because of permitting and power issues on Earth, then it makes a lot of sense to do that in a couple years.
Yeah, I will say, seeing the numbers right now, has definitely made me think, okay, this is like much more reasonable than originally expected. Obviously it all hinges on Starship. All of it hinges on Starship. Yes. But SpaceX launched Falcon 9 165 times last year. So to put up a Colossus 1 for 50 to 80, maybe at most 100 Starship launches, that's a pretty compelling, that's a pretty compelling business case.
Yeah.
Okay, so we're going to try something a little different this episode. So we are going to bring in our very first virtual guest. We haven't done this before, so we're going to try it. But our very first guest is Mr. Sean McGuire, who's a partner at Sequoia. He has been a huge proponent of SpaceX ever since when Sequoia invested in 2019. He has a very exciting, I'll call it, online presence. But he's here with us today, and we're going to talk to him a little bit about how he thinks about SpaceX and the Sequoia view. So we'll get that teed up with, there he is, Sean.
What's up, guys?
Welcome to the show.
No, thank you for the nice euphemism with the introduction. The exciting or controversial, there's a lot of ways you could spin that.
I didn't say
that's got to be your tagline.
I didn't say exciting. I didn't say controversial. I said exciting.
Exciting.
Because it is exciting.
I know.
But Sean, thank you for being our very first virtual guest on the show. We usually have everyone here in person, but it's great to see you and appreciate you being with us.
No, thank you so much for having me. It's obviously a very exciting week. And I got to say, the only reason why I'm here is because I've been a huge fan of your work, Mo, for 5 or 6 years. I think that in the early days of Starlink, you were one of the kind of first public public-facing analysts that really understood what Starlink was and how it was scaling, where it was going, and you earned a lot of respect from me in that process.
I appreciate it, Sean. I will say that I'm just here as a face, and the real guy who's smart is the one sitting right next to me.
I'm the
Jack.
quant.
This is my quant. This is my quant. Sean, how are you feeling?
I just heard you guys. I just heard you guys running through some numbers the last 5 minutes. So the quant is doing a good job.
Yeah.
Look, I'm obviously doing great. I'm excited for the IPO. I just heard some of Howard Morgan. I disagree with him on a lot of what, he's a very, very smart guy, an incredibly accomplished guy, but I disagree with a lot of what he said on this company. And I'm very excited for it. I think similar to Tesla back in like 2016, there was this battle of retail versus Wall Street perspectives. And I think retail won that battle. My guess is there's going to be a similar dynamic here where there'll be like a lot of Wall Street guys that think they understand this company, but my guess is the retail guys will probably understand it better.
So is the key thing that you disagree with Howard on? My guess is like his perspective on where the stock is going to go over the next over the near to kind of medium term. Meaning, effectively, what he said was he thinks the stock will pop, and then it will slowly decline before eventually, like long term, it should do very well.
Let me just say, none of this is investment advice, and like I don't want to get into stock movements. Yep. Like that's just something I can't comment on.
Sure.
But I think that a lot of people are underestimating like how quickly things are going to happen at SpaceX, and like this will lead directly to revenue growth, in my opinion. And in the last quarter, there was this Anthropic deal announced, there's the Google deal, obviously both sides have 90-day opt-out clauses. So none of this is like guaranteed long-term revenue. But if you add in those revenue numbers, you get to, and you have, call it 40, 50% Starlink revenue growth from the S1 number, you get to a 50 billion or so revenue run rate in Q4. And again, like there's 90-day opt-out clauses, but that already starts to shatter the narrative that I was hearing 2-3 weeks ago, which is like, oh, if you look at the Q1 revenue, it's 15% year-over-year growth and, losing money and insane multiple. And I think that I think a lot of people are just fundamentally misunderstanding how quickly things are going to happen in the company right now.
And is that on the launch side too, the launch and Starlink side as well? Because we have been tracking, you've been tracking this for 7-8 years, and I think at the time when Sequoia invested in SpaceX, Starship had its first prototype launch. It was a small hopper, but that was 7 years ago, and we still don't have an operational Starship. So I think I always condition folks to think more long-term in terms of space. Rockets are very difficult, and that doesn't mean they're behind. It just takes a while. So how do you think about that acceleration that you mentioned on the launch side and the Starlink side, when historically we've seen a very slow, cadence increase?
Yeah, I mean, and just one more comment on like what Howard was saying. I think that you teed up. And again, like Howard is a genius. He's an unbelievably successful investor. Like he's a great man. So I don't mean to, it's really unfair to like beat him up when he's not here. I wish we were having this conversation between us. But I think that a lot of people are underestimating like the scale of the moat at SpaceX. Like, and he made a comment that in 3 years, he thinks there will be a lot more competition in the space. And I think from what I've heard from Elon, SpaceX welcomes competition. Like the more competition, the better. Everyone benefits there. But I think like 3 years to me is just like extremely unrealistic in terms of kind of meaningful launch traction for some of the competitors, just given how hard it is. I think long term, there will absolutely be huge amounts of competition, especially from China. But going to Starship specifically, I've obviously been watching the development of the program. And in my opinion, there's all this progress that was made below the surface that people like don't see, and they kind of struggle to analyze or assess where Starship is along its development curve. And to me, like, I just think it's basically there. Like the company has essentially demonstrated everything you would need for reusable LEO flight. They have not demonstrated everything you would need for rapidly reusable LEO flight. But so let me unpack this. Like, SpaceX caught a booster. That was with the V2 Starship. They have not caught a booster with V3. So they caught a booster. So they demonstrated they can do that. They've now done a few controlled hover landings of ship where they weren't trying to actually catch the ship, but they were able to like hover where you would catch it. So I basically, in my opinion, I think that they've demonstrated now that they will be able to catch both the booster and the ship. There is then a real question and challenges around, can you make that rapidly reusable? And I think that the rapidly reusable will be important to go, from like 1,000 to 10,000 Starship flights a year. But in my opinion, they've already done enough. And in the first V3 flight, in the last Starship test flight, they released demo satellites, into simulated space environment, or not quite an orbital insertion, but could have been if they wanted it to be. And so if you kind of put all that together, in my opinion, they've already done enough to where I feel very confident that they could be flying about 1,000 Starship flights a year with very good unit economics, like very, very good launch costs, already like a significant reduction from what so it's that, if they were doing that, as you said, last year they flew 165 Falcon 9 missions. So if they were at 1,000, that's called a factor of 7 increase. And if the payload capacity is factor 7 greater, that alone is like a 50x increase in payload capacity that I think is like almost guaranteed, and with materially better launch costs. And already at that point, I think you can build 10 gigawatts a year roughly of orbital data centers, or you can, massively increase capacity for Starlink network or direct-to-cell network, or you can start to put infrastructure into higher orbits. Like there's a lot of flexibility of what you do with that capacity. But the point is, like, to me, that is already de-risked now. And like, if that's de-risked, the probability that they also make it rapidly reusable quickly is very high. But just if you're following the program and you see what's actually been done, sure, it might take another 1 or 2 years before they're really flying a lot of Starship missions a year. But I struggle to see it being more than about 2 years. Is kind of my like pretty conservative approach. And I think that in that scenario, they basically decide to fork Starship, and they make V3 as like, okay, V3 will be a working vehicle that does 1,000 missions a year and is never fully rapidly reusable. And then there's another development program called V4 that's trying to fix some of the problems and be rapidly reusable that can go to 10,000 plus missions a year. And so that's just, like, I'm sorry for going into so much detail on this, but I think Starship is foundational to the company. And I think people are really underestimating how far along Starship is and how big of an unlock it is for the company.
Yeah. Well, we're talking hardware forks, and
getting in the numbers. It's great.
So okay, so Sean, and by the way, Sean, I actually happen to agree with you on this technology piece on Starship, because I think two of the key program killers, like the heat shield and the precision landing on the second stage, largely looks at this point de-risked. So I think, And I got
to say on that, the company was specifically trying in these missions to fly like almost the most adversarial missions possible in terms of like very, very hot re-entries to really stress the heat shields, for example. And so I feel pretty good about where Starship is.
So I want to theorize for a second. So you said recently in an interview with our friend Molly that, I believe it was with Molly, that Elon is probably right about 80% of the time. And I say that because, and I use that as a lead-in because the AI story, the XAI story is relatively new, right? It wasn't really part of the SpaceX growth story for many years, especially when you invested in, I believe, in 2019. So let's just say, like, for whatever reason, he's wrong about the space-based compute. Like terrestrial, bottlenecks get solved. Let's just say, let's assume that. What do you think gets SpaceX to a multi-trillion-dollar valuation? Do you think it's possible without compute in space?
Absolutely. So, first of all, I'll play the game and I'll give you my answer in a second. But I have to say, I reject the premise of the game.
Okay.
And I just have to say that, orbital compute will work. You guys were just talking about this, but yesterday in the kind of the video that Elon and the company put out, interview talking about orbital compute, which I think explained a lot of the numbers and thinking to people. And you guys were just running through some of the math. I have gone through a very, very deep analysis myself of orbital compute. I should probably publish it, but I haven't had time. Orbital compute, in my opinion, it will work. It's 99.99% confidence, in my personal opinion. Again, this is not investment advice. And beyond that, I think the most important point is I think it will be the lowest cost provider of inference compute. And I think by multiple, a factor of at least 3 or so for large scale terrestrial compute, for inference compute. And I think that's coming, maybe not in 2 years, but I think being the lowest cost provider is coming in the next 5 years, with extreme certainty. And as we've learned in any commodity industry, oil or anything, if you're the lowest cost provider, sure, maybe there's some short fluctuations where there's an overbuild or some bottleneck gets sorted out and we have a surplus of compute on the ground. And so the economics don't make sense for a short period of time. If you're the lowest cost provider of any, massively consumed commodity, you are going to crush the way that Saudi Arabia did with oil, or there's many other examples in the history of the commodities industry. And so I think people are missing that orbital compute will happen, and SpaceX will be the lowest cost provider of compute, and that is just an incredibly valuable position to be in. Going back to your actual question, look, I don't want to give any financial projections here, but if you remove orbital compute, and even if you remove terrestrial compute, I think people underestimate how big Starlink and direct-to-cell will be. And it's a similar argument. I think if you look at, say, direct-to-cell, I feel pretty strongly that within 5 years, for any gigabyte of data that is going to someone's cell phone, and there's some variance based on where you are and the application and all this, but I think on average, for the average cost of delivering a gigabyte to someone's phone, I think that SpaceX will be by far the lowest cost provider relative to, say, putting a new 5G panel in almost any location. And again, when you're the lowest cost provider, just opportunities come to you. And so I think obviously the early form of this is SpaceX being a major partner to the biggest, mobile carriers in the world and helping them build out their infrastructure in rural areas where it's not economical for them to go lay a panel. But even in cities, I think that SpaceX will help a lot with overflow capacity in cities. And I live in Los Angeles. There's dead zones all over the place. Driving up the canyons to Mulholland Drive, you have dead zones. I think people are just really underestimating how much of the global internet traffic, both for broadband and for mobile, is going to be carried by the Starlink / direct-to-cell network 5 years from now. And I think that will lead to giant, and extremely high margin revenue growth for the company. And so that's kind of first case. Second point, in terrestrial compute, I think a lot of people were surprised by this Anthropic and Google announcements. And I think a lot of people are getting the wrong takeaway there. The way a lot of people are interpreting that is it's we're just in this temporary compute shortage, and so anyone's willing to work with anyone, and they're willing to pay any price for compute. I think that might be a reasonable way to look at the Anthropic announcement. I don't think that makes sense for looking at the Google announcement. And to me, I think an alternative hypothesis is that SpaceX's terrestrial compute is not actually a commodity. There's something that's better about it than other people's terrestrial compute. And I don't mean along every dimension. Like the Google data centers are modern marvels, the optical switches and TPUs and like the Google data centers are incredible. But I think there's a lot of real engineering going into the SpaceX terrestrial data centers. And again, like go look at Starlink, go look at the optical switches in space that they have. Go look at their ability to do power management, power smoothing, be able to run things at higher temperatures. With orbital data centers, probably the most important factor for cost and performance is being able to run compute at a slightly higher temperature. And for a radiator, it radiates heat away more efficiently, like temperature to the fourth power. Wow. So if you take a radiator and you run it at, say, 74 degrees Celsius compared to 60 degrees, 72 compared to 60, that's 20% increase in temperature. Put that into the fourth power, so it's a doubling. You run it at 20% hotter, it's a doubling in terms of the efficiency of the radiator. And like SpaceX's ability to turn these knobs in space to have a superior product and vastly kind of like a massive cost advantage, it also applies on the ground. And so I think like if you look at Starlink plus direct-to-cell plus terrestrial compute, you're looking at an absolutely monstrous amount of revenue in the not too distant future. And again, I don't want to give specific numbers. I'll give technical numbers, but I don't want to give revenue numbers.
No, it's super well said. And honestly, like I wish we had a lot longer time. I think we need like an hour or two to have this discussion with you. So maybe post SpaceX
Let's do it.
IPO, we can do that. But Sean, thanks so much for being with us. Really appreciate your time and your thoughts and your perspective. And excited to have you back another day.
Thank you guys for being such gifted communicators around what's happening in space and defense.
Sean.
Thank you guys.
Appreciate it.
Bye.
All right. Next up, Miss Liz Stein.
Liz,
USIT.
welcome. How you doing?
Hi, good to see you.
You got your space shirt on?
I do.
Welcome.
We got a Finders Keepers going.
Oh, nice.
I love it. Do you think that if we land on the moon, it should be a U.S. territory?
Ooh, I'm not here to talk politics today, guys. Not here to talk politics.
That's what your shirt says. Well, really appreciate you being with us.
Yeah, for sure.
We've been talking about SpaceX for the last little bit, so maybe just to broaden the conversation, why don't we just talk about where you've invested across the stage across stage with space companies. Like, where are we in the maturation cycle of the space economy today?
Yeah, so I think maybe like the easiest way to think about it, or at least like my smooth brain way of thinking about like the development of the space economy, is who's building and who's funding, right? So space went from being something that was the domain of nation states to now being underwritten by private capital and like being built by startups, which is actually great for like the American taxpayer,
Sure.
right, as a whole, right? Like when we're in an era of diminished state capacity, and now we have private companies coming in to provide these services, we're going to get better products for a lower price, which is exactly what's happened. So yay, capitalism,
Yeah.
So I think this space economy, like this is the cliche that like, my husband's got a bingo card at home of like cringe things I say. So here's one, we're just getting started. I think it's really like, so we went from nation states to venture capital, right, and more risk-taking capital. What we ultimately want to see is space become routine, reliable, legible to more conservative forms of capital, right? So you want the deeper pocketed infrastructure investors to play. And I think that will be even better for the space entrepreneurs, right? Because then they can just be regular entrepreneurs building a different layer of infrastructure that happens to be in space.
So we are definitely early innings. I think Mo and I definitely believe that, and SpaceX is one player, and I think SpaceX also just growing helps the entire ecosystem. More activity in space is better for everybody. The market, both public market and private markets, are based off valuations today. In some ways, are pulling forward some of that growth and are treating this like more of a mid inning market. So just in terms of valuations that you're seeing, you invest in the private markets, you've invested in a number of space businesses. What's your take on where those are in terms of valuations, herd investing, or folks just looking at one theme?
Yeah. So, I guess I'll kind of give the blanket statement here. Like, these are my opinions, not the opinions of my firm. On the public market side, I think we've been exuberant for a little while now, right? And it's not just happening in space, right? We're seeing it in quantum, in nuclear fission. We're seeing it in random companies that are perceived as parts of the bottleneck of the semiconductor value chain, right? Yeah. We're sort of seeing this, and it's always been true that growth commands a premium multiple in the public market side, right? So, the price is what people are willing to pay for it, right? The day it trades. On the private market side, I think the early stage investors, power law allows their investments to seem completely rational, right? They don't have to be as precise on timing, and they don't have to be as price sensitive. It's actually pretty challenging at the growth stage, right? Because timing is one of the important things there, right? And also how you do pricing, right? So we do some of the standard, kind of boring rote stuff around scenario modeling and comps and all of that. But ultimately, it's the risk reward profile of the bet that you're taking.
How do you think about valuation discipline in a sector where the TAMs are measured in trillions and the timelines are decades?
Right, space is the only infinite TAM, as Case likes to say. Yeah. Another bingo card check for him. Yeah. I think that it's the ultimate growth of the business, right, and where it can go, right. TAM is less legible than execution risk and what we're actually doing.
Yeah.
So.
Well, okay, let's take a quick step back because we didn't talk about USIT. Tell us a little bit about the firm.
Ooh, yep. Not sure how much I can really say other than we're a growth stage fund who invests in private companies that have technologies that are relevant to the national interest. Okay. So that's our one sentence on our website. I think I feel safe saying that.
There you go. Very, very mysterious. There's a herd mentality that's been forming within space and also the defense ecosystem over the last couple of years, I'll say 2-3 years. Every sort of generalist fund now wants exposure or is now kind of an overnight space and defense investor.
And there's Stoke is a investment of yours, is that correct? Yeah. Yep. So I think maybe that's and I think there's been a lot of interest in Stoke and correct. A lot of interest in investing in a business that can potentially compete with SpaceX. Can you kind of talk about the Stoke story?
Okay, yeah, we can hop ahead to that. Our investment there, I guess it's probably relevant to share a little bit of my background. I'm an aerospace engineer by trade. I did that for 15 years before becoming an investor. So, I like to think that I am well calibrated on what's interesting from a technology perspective, right? And we really like the approach that Stoke is taking for full reusability with the actively cooled heat shield, right? I think that will allow them to operate at a high operational cadence and drive costs down. So that's what got us excited there.
And they are, because they can be fully reusable, they are potentially looking to compete not just with a first stage reusable rocket. They're looking to compete with a SpaceX that is potentially fully reusable. What does that mean for the market? What does that allow you to open up? Do you think Stoke is just going to stay in the launching customer payload market, or do you think they could get into building their own constellation and kind of vertically integrating?
Sure. So I think, fundamentally, to frame it as a competition with the 800-pound gorilla is maybe not the right way to look at it. It's an expanding pie. Right, and right now, there's a massive compute crunch in the terrestrial side for AI. There's a massive launch capacity crunch as well for space, right? That launch is still a real and fundamental bottleneck, and what SpaceX has done over the last 20 years has been absolutely incredible for reliable, reusable, repeatable launch. Awesome, right? And it's allowed them to build really interesting verticalized application layer things on top. Really, really great, right? Everyone else is still getting to step one. Right, so let's do that first, right? And I will let Andy talk about what he wants Stoke to be after that.
So we have this sort of viewpoint that there's a world where SpaceX doesn't launch commercial customers anymore because they're hyper focused on their own needs on their own payload needs. You don't have to comment on that, but what do you think about sort of Stoke in that world, like where there is a desire from SpaceX not to focus on sort of small or medium launch anymore because they just have much grander ambitions?
Yeah, I think they will use a lot of their capacity. I imagine they'll reserve some for government missions and for certain commercial customers just to avoid antitrust, right? It's all speculation on my part, but I imagine there's some amount of that in their business plan. I think all launchers, right, have an opportunity to step in because the need is not just what we're seeing in, AI data centers, which is sort of the hot thing right now in space, right? Orbital data centers. I think there's massive needs on satellite communications. There's potential future needs in infrastructure as we increase launch cadence for manufacturing of crystalline materials up there. There's a lot of interesting things that you can do up there. I think SATCOM in particular is going from something that right now is serving consumers and bridging the digital divide to an orthogonal layer of critical infrastructure for enterprise and sovereigns, right? We live in an age of geopolitical uncertainty, and redundancy is not resiliency. So having multiple subsea cables is no longer actual resiliency when we live in an age where nation-state actors are developing, submarine drones that could attack that all simultaneously. So you need to have orthogonal infrastructure, and I think that's going to become more and more important over time. So space will become a critical layer of that for both, sort of the fiber networks, but also the mobile tower networks, right? I don't know if you guys were in New York when Verizon had that attack happen, right? Did you lose service?
Yeah.
So I think the mobile network operators are also realizing that space has to be part of their infrastructure build-out plan going forward, and there's some interesting things that they're doing there with joint ventures, et cetera, to try to conglomerate and position themselves for strength against SpaceX, who's kind of a behemoth, with ambitions to drink their milkshake.
Yeah. What do you think the orbital compute landscape looks like in the next 5 years? Like, how much of it do you think is on Earth, on the ground, versus orbit?
All right, you ready for the very long answer? Because I actually, the best part of my job is I get to spend a lot of time looking at semiconductors and compute.
I love it.
And I love it. I'm an aerospace engineer by training, and all the respect in the world to the chip people. I think what they do is so much harder and so much more impressive, and it's incredible to see. All right, that little bit of nerding out of the way. So the thing I highly recommend you guys read, and everyone who's watching at home, there's a paper called AI and the Memory Wall. It came out, I think officially, IEEE released it in 2024, but it started as a blog post in 2021, and it talks about the difference between where logic has gone on Moore's law versus memory, right? And memory has not been able to keep up. It's on larger nodes. So we have this memory bottleneck where the AI models are quite large, and you have to break them apart. The technical term is called sharding them across multiple chips. And when I started researching this space in 2023, we were spending 30% of the time with actual logic computing, 70% of the time just moving data around on and off chips to do the compute. So logic utilization was at 30% a couple of years ago. Now that we're at the frontier models being 2 trillion plus parameters, logic utilization is going down to single-digit percents. That's nuts, right? So we have massive inefficiency in the market, and there's a ton of innovation on the semiconductor side to address that, to address the memory wall. So, we did an investment in Celestial, who was recently acquired by Marvell. They're looking to solve that with silicon photonic optical interconnects, right? So that's one approach, is a different modality of compute, going from moving electrons over copper to moving photons over fiber, right? And with lasers to do the data movement piece, right? We also have people looking at new types of transistors. We saw a much earlier stage company working on proton-gated transistors as a fundamental way to reduce power required for compute by 2 orders of magnitude. So we have all these different modality innovations, right, and different things. There's also architectural innovations with silicon CMOS, right? And there's a lot of really interesting things going on there. You both have Macs, so they both have the sweet unified memory architecture. I bought one as well. And then I saw Windows recently, the PCs have come out with this now too, which I think is actually the first time I've been excited about a PC laptop in a long time, right? So we're seeing that, right, on the edge. And then on the data center side, we're seeing companies like D-Matrix, like Positron, like Majestic Labs, all looking at architectural approaches with standard copper and silicon CMOS to solve the memory wall. So we have all of this innovation going on terrestrially to solve this, right? Orbital data centers are solving for a different problem, in my opinion, all right? Again, my opinion here, I think what they're doing is solving for speed to deployment. Remember, the backdrop here is we are in the biggest compute crunch of the last 30 plus years, right? I think the XAI part of SpaceX has cut some incredible deals for their data center assets and having people utilize them, right? That just kind of speaks to where we are in the cycle with the compute crunch. And I think that it's going to extend far longer than any of the bears think it is, right? So on the orbital data center side, you get speed to deployment because in space, nobody can hear the NIMBYs scream. Yeah, right? Yeah. Like nobody can protest build out there. Yeah. So you have that ability, right? And then you have what, the ultimate vision that Elon expressed yesterday around terafab and doing this at scale, right? In the limit, right? Where I essentially it's interesting people talk about power as part of the bottleneck, but if you kind of go out in time, if you're at an orbital data center, you get it for free from the sun. If you're on the ground, we could have fusion in the next 10, 15 years, right? And then we're down to a cent per kilowatt hour. So assume power is de minimis part of the equation, right? So really what matters is speed to deployment, right? And that I think is where orbital data centers have an advantage. I don't know what the mix will look like between the two because I think that my smooth brain here is that it's a bit of a timing race. Like how quickly does Starship ramp to high cadence to hit the economic numbers they need, right? We've heard anywhere between $100 to $500 per kilogram into LEO, right? How quickly does SpaceX ramp Starship cadence to hit that number versus all of the innovation going on the ground and how quickly that ramps and deploys, right? So there's a ton of brilliant people in the semiconductor space doing amazing things. There's a ton of brilliant aerospace engineers out there. It'll be fascinating to see, how the future unfolds in the next couple of years.
We had Howard Morgan on earlier in the show, and he talked about how in every other infrastructure build-out cycle, there's a big build-up and eventually crashes, and then you have essentially an overbuild. There was overinvestment in it. What does this look like in 5 to 10 years in terms of the supply-demand imbalance? In terms of the NIMBYism, how does that look in 5 to 10 years? Does it alleviate? Do we kind of get to equilibrium? What's your thoughts on that?
Yeah, there's I think two separate questions there, right? So the semiconductor industry previously had always been cyclical. I've heard a lot of people kind of try to come up with mental models for intelligence that maybe, it's not going to be a cyclical thing and that we're actually in a long duration infrastructure supercycle build out where intelligence is maybe better thought of like electricity, right? And it's just going to be a long time build and there's going to be increasing demand over time. And I think that matters for the American economy. And I think that matters for national security, right? I'm sure glad that, Anthropic got Mythos first and fixed all those 0 days. I think they should get a tax deduction for the compute they used to do that. Really awesome work by the team over there. If you think of intelligence as now like a fundamental building block of the economy the way electricity was, right? Then maybe we won't see that cyclical behavior for quite a long time, right? That we're actually going to see demand continue way more than we thought, in particular because there's user growth beyond just me and you typing on a laptop now, right? There's agents who are going to be partitioning and using compute, right? I think there was, some rumored company that spent $500 million in tokens in 1 month last month, right? So obviously enterprises are trying to dial that back and be more thoughtful about it, but the point stands that compute can now query and get more compute, right? So I think that there's always boom and bust, but I agree fundamentally with a point Gavin Baker said a while ago around TSMC as a very conservative sort of like national asset for Taiwan is actually sort of a limiter on where we can go. Right, so Elon's talking about terafab as being out there deploying billions and billions of chips. So maybe that is over time less relevant. But for right now, right, they produce 90% of the world's leading edge logic. Samsung is the other 10%, and let's hope Intel is able with 18A to deliver. Intel's always had incredible advanced packaging, right? That's sort of their crown jewel. As we start to innovate more around architectures and like the N-1th node from the leading edge, I think Intel will see more volume. But yeah, I don't think I answered your full question.
I think you did. I think you did.
Where do you think the best investment opportunities are within the compute and semi space?
Yeah, so I think there are a ton of really great, and I'm happy to provide you guys a list, resources out there of folks, like I didn't even talk about the hyperscalers with their custom ASICs, right? We didn't talk about merchant silicon, what AMD is doing, what Intel is doing, what Qualcomm is doing, what ARM is doing, right? We haven't talked about any of those dynamics versus what NVIDIA is doing, because NVIDIA is not going to stand still, right? The future of compute is heterogeneous, like full stop. It's going to be hardware that is specific to the workloads, right? And that was somewhat a contrarian take when I formed it a couple years ago, and then NVIDIA made it very obvious with their CPX chip for prefill, right? And now everyone's talking about prefill and decode specific things, right? I would recommend that your listeners read some of the great work out there and form their own opinions on that.
When you think about SpaceX and its advantage, you called it the 800-pound gorilla. Now you also invest in the lots of different categories within space. Obviously, we talked about Stoke. What's sort of your mental model? What mental model do you think a founder needs to have to be able to build in SpaceX's shadow, at least in the beginning, without getting eliminated?
Yeah. Maybe this is more just classic startup advice. Find an underserved customer and build something that they really want and value, right? So I kind of alluded to this earlier around SATCOM and sovereigns and enterprises really understanding that it's going to become a critical piece of the puzzle for them going forward. I think we're also seeing that with Earth observation systems, that nation states want to own their own capacity and capabilities, right? That folks want alternatives, right? That they don't necessarily feel comfortable with just tapping Starlink for SATCOM, that they want multiple providers, right? Or that they want to have their own owned intelligence assets, et cetera, right? So there are folks out there who have big needs and big pockets, right? And building for people who have something that I think it's much easier to underwrite technology risk than it is market risk and timing risk, right? So make sure there's a market for what you're doing.
Yeah. Amazing. Well, Liz, thanks so much for being with us.
Yeah.
It's a pleasure to have you, and I appreciate all the insights on the compute side.
Yeah, it's good seeing you guys.
I'll do it again.
Yeah. All right.
Thank you.
See ya.
All right. Can you believe it? We have a second virtual guest today.
I know. First one went pretty smoothly, so
let's
keep rolling with it.
I thought it went pretty
So
smoothly.
this is our last guest of the day.
So last guest of the day, and we have a very, very good one. I'm very excited to welcome Dan Ives, who's the Global Head of Technology Research at Wedbush, a regular here at the Exchange, and has had some pretty exciting and interesting views on SpaceX and Tesla as well, which we'll talk about. So excited to have Dan on the show today. Dan.
Great to be here.
How are you?
Great to be here. Yeah, good to be here.
I love-
Exciting week.
I love your shirt.
Hey,
So
Yeah.
why don't we jump right into it? We've spent a good chunk of this show talking about various potential scenarios of the SpaceX IPO, valuations. We talked about $600 billion valuations all the way up to Ron Barron's $30 trillion. How do you think about the valuation today on SpaceX, the $1.75 trillion, and also where do you see it going?
I mean, look, someone that's covered Tesla from the beginning and so many of these other tech companies going back to the late 90s, I don't get too caught up with valuations coming out of the gate. I mean, to me, it ultimately comes down to what's the addressable market opportunity? And then as they execute, they prove it out to the market. I think part of the issue, when you look at SpaceX, you can't just put it in a space category. You can't just put it in AI data category. You can't just put it, what I ultimately view as sort of a navigator of the fourth industrial revolution. To some extent with SpaceX, investors, they're buying into Musk as much as SpaceX. And I think that's sort of the opportunity. And look, the whole market's waiting to see how this ultimately prices, how it reacts. But again, it's not over coming days. It's how this thing plays out over years.
Yep.
And do you see the revenue acceleration coming very fast, or do you think investors should be patient with it, knowing that SpaceX, on both the connectivity, the launch, and the AI sides of the house, are building at the infrastructure level, and this is kind of like the heavy cash burn days? How do you look at that?
I think it's similar to what's going on with AI and the hyperscalers. Like if you just judge them on monetization today, it's been obviously we're still in the infancy. CapEx is all about what this is going to look like over the next 1, 2, 3 years and really the next decade. I think that is how investors are likely going to view SpaceX. This is not going to be quarter by quarter. It's years that we talk about, but ultimately it's for Musk to lay out the vision. You saw in the S1, obviously all that data that they provided to lay it out and now to execute. But look, investors, like when you talk about Barron and others that, talk about their total addressable market opportunity, that's not over the next year or two. You're talking about, you're betting on a generational company that's really going to define the category of space.
Yeah. Have you spent time on space companies that are public in general? Like, I mean, obviously SpaceX is coming on Friday, but like, and do you have a perspective on the other space companies? I mean, Rocket Lab obviously making a lot of headlines. A lot of other companies in that bucket.
Planet Labs, Voyager, yeah. I think, look, if you go back the last year, and I've seen it in space, space hasn't really been a sector. There have been one-off names. But I think now what starts to happen is investors, because if you own the sector, you won't just own SpaceX. You're going to own, whether it's Rocket Labs, Planet Labs, Voyager. You're going to own other pieces of the space ecosystem. It's been hard to put a valuation on it because there's no precedent. It's still in its infancy in terms of where a lot of the opportunity is going, and I think SpaceX, it's going to put a mark in probably a good way for the sector from a valuation perspective.
Yeah, it's interesting. I know there's been a big run up with these space stocks in the last couple of months, and as you said, folks are looking to see if they can evaluate based off the revenue multiple that SpaceX has. And it's like, at this point, is SpaceX really a space business? They seem to be, as you mentioned, a category of its own. I want to talk about the two big data center capacity rental deals that came out, which is going to more than double their revenue. That we had Howard Morgan on earlier, and we were talking about how the being a data center business is a nice business, but not as interesting as being a LLM company or a AI at the application layer business. How do you rationalize? What do you think Elon is doing with those two deals? Yeah.
Well, I think it's must view, and I think it's similar to many other tech CEOs, Palantir and others. Like LLMs and the models, eventually there will be some level of commoditization over time. Now, obviously, XAI, SpaceX, that was key, in terms of that piece. And there's obviously a lot of room that they need to make up, versus Anthropic, OpenAI. But I think this is really all going to be about infrastructure, data center, and building out their own sort of stack. It's really going to be their own ecosystem. It's why my view, like over the next year, like we've said, over an 80% chance that SpaceX and Tesla merge, because that's the thing that makes the most sense to me relative to data, cross-pollination of engineers. But it's really about what they're building. They're building basically, what everyone NVIDIA's doing or AMD or OpenAI. I mean, Musk is essentially building that within his own companies.
Yeah. What do you think about the retail elevated retail allocation, 30%? It's typically a lot less than that, 5 to 10%. And do you think that's, do you view it as like the democratization of investing in an IPO? Or do you see that as maybe limited institutional demand? Or I shouldn't say limited, maybe not as much institutional demand. I mean, what we're hearing is the books are something like 2 times oversubscribed. Obviously, the books will close tomorrow night, so there's still quite a bit of time. But tell us a little bit what you're thinking about the retail allocation on this IPO.
Retail has been the lifeblood of Musk and Tesla. And I think it's very similar to how people like, Alex Carr views Palantir. I mean, retail has become so much more important in this market. But when you think about going back to the history and the DNA of Musk and Tesla, retail were the believers, institutional, they were really the skeptics. Now, obviously, many that bet against Tesla, that was a historically wrong move. But I think it's very in line with the view not just of retail investors in this market, but the history of Musk, Tesla, and especially where SpaceX plays into. I think it makes a ton of sense. And even though it can maybe raise eyebrows to some, in terms of the differences, I think understanding the background, the DNA of Musk and Tesla, it kind of hits right down the middle.
What's your current probability on a Tesla SpaceX merger in the next year?
I think it's over 80%, 80, 85%. I mean, look, because that's the one that makes a ton of. If you just go back over the years, it was always he buys Twitter, X, ultimately XAI. That's going to be the first one. XAI, SpaceX. That's where we are today. SpaceX goes public, then SpaceX and Tesla. I mean that from a sequence of events is the one that makes the most sense, and also Musk wants all the AI technology with control under one hood. And that to me is really, I think that is the path for this.
And on the timing with it, how much of this do you think is due to the maybe supportive regulatory environment with all these acquisitions coming one after the other, with SpaceX still being a pretty small company? What's your thought on the regulations, the antitrust kind of thoughts that Elon is thinking about now?
Yeah. I mean, Musk obviously well aware in terms of the sensitivity given, do they get too big, regulators in this environment, relative to the strong get stronger, in terms of from a big tech perspective. So I think there's some of that at play, but also you don't want to drink out of a fire hose, right? It's important step by step, the way this is built, and you don't do it all at the same time. But this is just such an important week, not just for SpaceX and Musk, but I think for the broader market.
Dan, just moving away from the SpaceX story just for a second, you cover a lot of technology. Is there a single investment out there that you think is incredibly underappreciated?
Look, I mean, I continue to view fourth industrial revolution, we're 15% through. We're going to have some moments, whether it's geopolitical, Fed, or sell-offs, but I mean, I believe we're in the midst of just a multi-year tech bull market, and chips continues to be where you want to be. We've talked about NVIDIA, AMD, Micron, and others, and I think ultimately it's really software and the data layer that's now starting to see the monetization. It started off Palantir, but look at Snowflake, look at Datadog, Innodata. That's all now starting to happen as the derivatives play out across tech.
Amazing. Dan, I know you got to run soon, so really appreciate you being with us, and thank you for taking the time.
No, thanks for having me.
Amazing. Till next time.
Interesting. Did we cover everything SpaceX related?
We definitely did not. We definitely did not. There's so much we didn't cover, but you know what? There's just a lot to cover, and I just don't think this is.
I think we got pretty far. We got the orbital data centers. We got the Tesla conversation. We got a lot of talk about the valuation. One thing I wanted to, we never really touched about. Sean mentioned a little bit, but the Starlink direct to cell.
Yep.
And Sean brought up the point. Sean McGuire brought up the point that he thinks it's going to be the most efficient way to transport data, and he was talking about it in terms of dead zone coverage, but I think the wink with all of this is them becoming more of that and becoming more of a full stack player.
Yep.
And what does that look as? Can they be an MNO that competes directly with Verizon, AT&T, T-Mobile, and that? If you want to meet that TAM, you need to get there, and I have a number of questions on how they are going to get there. I think that they might have to partner to some degree with terrestrial players or Spectrum.
And in the interview that came out yesterday with Gavin Baker, who's at Atreides, who was interviewing Brett Johnson, CFO, which you don't see very often. Brett,
No, I missed
being
this
on
interview
too.
actually. Yeah.
But Gavin basically talks about how, like, he thinks that basically the Starlink, the internet kind of broadband, and the mobile opportunity is about 1.6 trillion, 800, basically split 50-50, 800 billion on the Starlink internet side, and then 800 billion on the mobile side. So to kind of Sean's point, the question we asked around, what if the compute story doesn't play out as expected? What is the opportunity? I mean, it's a pretty substantially large opportunity.
I think this might be my hot take for the day, but I think you might see one more big deal after we'll have Cursor close. There's a lot of talk. I think that's priced in pretty high of a Tesla acquisition. I think you might see one more big deal. I'm not sure how it will be structured or what it would look like, but I think that the missing piece to the whole puzzle here, with the AI story, with the infrastructure, with the models, with the connectivity, with the broadband, is how do you complete it with direct to sell? And does that mean you have to buy an M&O? That means buy a Verizon, AT&T, T-Mobile. Does that mean you have to partner with them on a long-term leasing deal or something? I find it hard. It's a very difficult. Well, let's put it this way: spectrum is one thing that SpaceX can't just go and build.
Yeah.
It is unique. It's governed by physics, and certain folks have access to that.
Do you think? Are you kind of alluding to the fact that SpaceX will acquire a Verizon or T-Mobile?
I think there would be it's a big headache. It would be nice to have that spectrum and that infrastructure for kind of overflow capacity, especially if you're in a building at the New York Stock Exchange. It is going to be hard to get very, very strong service from space. Even if you bring them down a lot and make them bigger, you can. But I think to some component, to some degree, you'd probably want some partnership. And those M&Os they're cash flow machines trading at very low multiples, but maybe more of a leasing or capacity deal where you pay an annual payment and maybe give equity is possible.
Yeah, no, it's really fascinating to see someone like Howard, and I know Howard and Sean had a little bit Sean was a little bit at odds with Howard's comment, but I do think Howard's longer term view was very, very positive. I mean, what did he say? He said the space and defense ecosystem is in, like he said, 85, like kind of the 1980, 1985 is of where the internet was. I mean, that's a crazy statement to say, right? I mean, we all know what has happened with the internet. So and then Dan talking about the Industrial Revolution, Liz talking about where we are on the compute side. I mean, it's very exciting.
Yeah.
Do you care to make any predictions on the SpaceX IPO first 30 days?
I mean, I think the story is already written. It's it happens with every IPO ever. It pops on the first day and it stays elevated to some extent, and then it grinds down.
Yeah.
And I don't know where. I mean, you could throw out a number. I think that opening number is going to be pretty high.
Yeah.
But everybody on the show, and this was, I thought, an excellent answer from everybody, talked about how we shouldn't look at near-term volatility, and it's better just to talk about the story of this company and what that means.
Yeah, and I think Howard said it right, which is it's at the end of the day, it's all about your horizon, right?
Yeah.
If you're Renaissance doing quant trading and you're trading on microseconds and milliseconds versus if you're someone who has a longer time horizon, I think ultimately, that really really defines how you should think about the stock. And I mean, look at Tesla. The Tesla. I mean, I looked at this yesterday. Over the last 5 years, the stock breached the $1 trillion number 10, 15 times, meaning it traded above $1 trillion, then traded below $1 trillion, and then in some cases it was longer periods of time where it was trading below $1 trillion, and then now it's above $1 trillion. So I think there will be opportunities to buy SpaceX. I don't think the IPO is the only time you're going to be able to get a good price, but long term, I agree with everything that's been talked about today. I mean, we're heading into a very exciting future.
Yeah, 2 days,
Awesome.
3 days, yeah.
Well, with that, that concludes our SpaceX show.
Yep.
I'm very excited for our next one, but we want to thank you, our wonderful viewers, for tuning in, and excited to have you see us, and we can't share who our next guests are quite yet, but we'll definitely have an exciting next show. So until then.